It's Thursday, that means it's legacy day. Let's take a look at some legacy charts, why those are important to crypto, specifically Bitcoin. Starting off with the VIX, the VIX volatility index here. Historically, if the VIX is rising or above 15, 20, 30, that is bearish for BTC. If it is falling and below 20, it is bullish for BTC. Obviously not a one-to-one correlation, but a way to gauge legacy market sentiment. So VIX is currently 22. It was 19 or less at last week's close, I believe, this time. So a little bit more uncertainty in the markets. In general, uncertainty means risk off, which is another way to think about the risk on, risk off mentality. Considering BTC historically has been a risk on asset, although that is, fluctuating and changing over time. If it's a store value, if it's a gold analog, then it should be a risk off asset. If it is a safe haven from inflation and stuff like that, it should be considered a risk off asset. But you can't put Bitcoin in a box and just give it a label. It is a genreless entity in the world of legacy finance. Comparing it to the DXY, this is the 30-week rolling USD dollar index correlation. Extremely negative since late 2020 and continues to hold rather negative over the past few weeks, somewhere around 85% negative correlation. So what that means is if DXY is falling, BTC should be rising and vice versa. One reason to pay attention to the fluctuations in the DXY. For sure, gold has been surprisingly negative over the past year, since 2021 specifically. So what that means is with gold falling, BTC is going the opposite direction. This is a potential signal that gold bugs are transitioning to things like BTC as a new store value or as a new investment form, an investment vehicle as a hedge against inflation. Now looking at stocks, SPX, NASDAQ correlations, those continue to be almost 100% correlated. So what you don't want to see is a fall in SPX or NASDAQ. You don't want to see bearishness there because that will probably lead to bearishness in BTC. And again, this is risk on, risk off stuff. If SPX and NASDAQ are bullish, that's risk on. And that has been highly correlated with BTC. So therefore you can say, okay, BTC is a risk on asset, risk on vehicle currently. Looking at DXY individually, it's had a series of inverted head and shoulders that have broken up slightly and then eventually drooped down below the 200 period moving average on the 4 hour. 88 is the big level everyone's watching over long term. So if we fall below 88 or 288, that should be incredibly bullish for BTC. If there is a stimulus passed, which there should be relatively soon here, that would be incredibly bullish for BTC because DXY will likely take a hit, although some people argue that the stimulus is already priced into the DXY. So we'll see what happens when it happens, but I wouldn't expect the DXY to randomly be bullish once the stimulus passes. This is USD CNY, which is the US dollar Chinese yuan pair. And historically, once China devalues its currency or continues to devalue its currency, that has been bullish for BTC as well. So should we return to 7 on this pair or make our way to 7, I'd expect that to be rather bullish for BTC or just add to the macro headwinds as far as what's going on with currencies around the world. The currency wars, as it were. So if this has bottomed, this may signal some capital flight out of the CNY into other things like potentially BTC. Gold, I've talked about this for weeks and weeks and weeks now, but gold is painting this pretty high probability edge-to-edge move from 1750 to 1610, something like that on the weekly chart. You can see what this has looked like. Previously, it's sort of dipped down and then eventually dropped, but I wouldn't expect bullishness anytime soon for gold, maybe leading into 2022. So it's good that BTC isn't following gold right now. On the correlations, that's pretty evident. And again, this could just be outflows from gold into BTC. Certainly potential. A lot more people have started to pay attention to BTC when prices are 30, 40, 50K than they ever paid attention to it at 1, 2, 3K. It's just a different beast when it's $1 trillion market cap or approaching thereabouts. Looking at silver, silver is actually way more bullish than gold as far as trend metrics are concerned, and just the structure of this potential markup phase. This could lead into some sort of cup and handle on lower time frames, on the daily perhaps, but definitely much more bullish than gold. And if you compare the two XAU XAG pair, it did reach a near, I believe this was an all-time high. I don't have data prior to 2007, but in 2020, the Corona March is when gold really led the charge on the XAU XAG pair, and now that's returning into silver strength, gold weakness. Bit of an interesting setup there. SPX on the daily continues to scream towards 4K. Now I suspect any stimulus would be bullish for SPX, and you could argue it's already priced in. That's fair. I wouldn't bet against it if we are getting a stimulus though, so it's hard to be short up here, even though it does look insanely overbought and needing a significant pullback, which should be bearish for BTC as well. You know, if there's a massive down day in legacy, I wouldn't expect BTC to just go in the other direction based on the correlations over the past year. I mean, March is a perfect example of that. Everything in the world sold off in March. I wouldn't expect another March anytime soon, but a retest of the 50, of the 200 period moving average is completely possible. Same thing with NASDAQ. NASDAQ is, it's at levels never seen before currently. So a retest of the 50 or the 200 is certainly possible in the near term. But again, if we get a stimulus, I wouldn't bet towards a massive pullback on the NASDAQ just because it's been risk on, money printing, whatever narrative you want to choose as far as inflationary, blah, blah, blah. We print more money, stocks go up, equities go up. That's just the way it is. The name of the game. Should be bullish for BTC. Taking a look at GME and AMC. I talked about VPVR in a video this week, but just similar to Doge. Doge has had a range from 0 to 100 sats essentially for the past 7 years. So I wouldn't expect GME to consolidate bullish in any way, shape, or form at this level. The VPVR level where the most volume has occurred is at 24. So it's probably going to return to 24, reconsolidate, figure things out from there. But I wouldn't be holding GME. I wouldn't be expecting a pop on GME. I wouldn't be trying to short squeeze GME. Like, all that's done. It's over with, right? The party's over. What happened has happened. It's in the past. And that trade is long gone. Same thing with AMC. AMC has been rather volatile even before the 2021 pop up over those few days in that week. Really, most of the volume is sub 550, sub where it is now. So it'll probably continue to range from 2 to 5, depending on Corona headlines. Basically, movie theaters aren't opening in the U.S. anytime soon unless vaccinations go up. It's all this stuff is hand in hand as far as a return to normalcy in the U.S. Looking at GBTC, there's still a slight premium on GBTC, so times 100 would be 52.9. Spot price right now is at 51 something, I think. So maybe a 10% premium or thereabouts on GBTC. So GBTC remains rather bullish and at an all-time high. This is Grayscale's BTC pink sheet equivalent. So I'd rather see this bullish than bearish, and I'd rather see it at a premium than non-premium. If it's at several multiples of percentage premium, then that's an issue. But I don't have an issue with this just holding a small premium. ETH also has a small premium here. 21.12 would be the equivalent roughly for ETH. And I do like the structure here, cup and handle situation. I like consolidating at these highs. For ETH, this chart looks a lot different than ETH USD in lots of respects, but I like that there's tons of volume up here, tons of support here. So all this to me looks like bullish continuation, or looks like it wants bullish continuation in the near term, certainly. BTC 1 exclamation point is the CME futures contract ticker, rolling front week, and a little bit of a premium here. It's closed now, but overall this looks fine, looks healthy. Obviously it's just to the moon. Definitely all-time highs on CME as well. Tons of volume, tons of interest, tons of trading going on through 2020, through 2021. This is ETH 1 exclamation point. This is the new ETH futures CME contract, and not a ton of volume or activity. This is a low time frame, but it's only had a week now or so of trading history. So not really a premium, really holding parity here with spot prices. And I expect this to pick up over time, as people hear about it, learn about it. I certainly saw more volume later in the week than earlier in the week, but it's early days for that contract, certainly. This is the net positions of the BTC CME contracts. And the leveraged money is mostly short, and this is sort of expected as it's net neutral if they are long the spot side of the trade. So you can long on Coinbase or whatever, just buy BTC spot, and then you're hedging it out to net neutral on the CME side of things. So I actually like that this is heavily short on the leveraged money. That to me says there's tons of spot interest. My guess is not too many of these people are net short because, look at the chart, right? Like if you're net short from 10K, you're going to have a bad time. It's 5x from there. So odds are pretty good that this isn't net short people here. This is people who are long spot, short futures, that sort of thing. And then lastly, looking at the CME futures contract rollover dates. February 26th is the next rollover date, so that's next week already. And we should see some volatility leading into that as you see these positions rolling into the next contract or closing or opening. There's all sorts of shenanigans that happen around those dates. So let me know if anything in the legacy markets interests you that I haven't covered or things that you think is relevant to crypto in the comments below, and happy trading.